Tuesday. Wrapping up here in the final hour. I've got a couple levels I want to watch for the SPX today. I had a nice little winner on daily profit play. Put in a lot of trades that are pending in my newsbreaker service. Had a winner close out on pinch point scanner. Double up service had a nice little alert as well that should be showing some profit. Let's check that one late in the day. So here, trading for about 200% profit if you're still holding. So if I have anybody in double ups, that was exactly what I wanted, which was more than double. So initially I was setting an 80% take profit. I took a 50% take profit to be just, taking the money, but we're right down near the lows around the 63.70 mark. And that's trading now for about $1.10, $1.15, enough to turn that trade. So let's say we get out for $1.15, 40-cent debit. That is I guess $1.15 minus the 40 over the 40, about 187% gain. So not bad if you're still holding. $1.15 looks good. $1.10 that's easy fill. $1.20 would be great. That's almost a 200% gain. So pretty good on double ups today. Mag 7 tomorrow. We have earnings. I mean, there's a ton of earnings this week. There's 790 companies. Mag 7 is tomorrow. It kicks off, I believe, with Meta and Microsoft, and then we have Apple and Amazon on Thursday. Also tomorrow at 2 p.m. Eastern Time is FOMC. That's going to be the rate decision. Likely going to be a pause, but Powell's press conference at 2:30. Is it revealing any language that the market wants to hear, doesn't want to hear? We will find out. We'll take a look at all that tomorrow. I will be also in a trading battle tomorrow afternoon. I believe that starts off at 1:30 p.m. Eastern Time. I'll share that link if you'd like to join me. You can join that in my Discord. That'll be a lot of fun. Should be Akil Stokes is the other fellow trader and myself, and then hosted by Nick Sayak with A1 Trading, and hosted by ACAP and Trading Battle. It's just a lot of fun. So we get to do those, 10, 15 times a year. I love being a part of them. So that'll be a lot of fun tomorrow. Let's chat. So here we are for current levels. I'm curious how the market's going to close today. I do have some pin levels that I'm watching here. I want to see if I can get something pinned around this 65 to 70 zone. I'm going to keep a close eye on this one. If we're down to this 65, 70 zone, let me set a chart alarm here at, let's go 6370 and see if I can take some profit here in these final 30 some minutes. So we come close to 70 or 71. That should offer me some profit. Let me take a quick peek at it right now. So this one is 70.75. I've got to get this one out of here. Okay, so the 70 and 75 and a 65.60. This will be an iron fly. Right now that's up about $100. And let's see if we can get this to pin a little bit more. Let's see, we're at 72. My sweet spot in this one is $67. So if this goes down a little bit lower, I need to sit on this one. Truly, I need to sit on this one until the end of the day. I don't have to, but if I do sit down at the end of the day and we're down to 63, 67, then I can max this thing out around, I think, $400. Yeah, I can max out at $400. I'm up right now about 95. I think I might just take the profit here. Let me see if I can grab $100 real quick. So $8, yeah, let's get that $7.95, baby. $7.95. You already have, let me check this one. So cancel, 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 and see if I can close that one down for $7.95. All right, so I just grabbed $105 out of that one. I'll take it. That way I'm done for the day. We grabbed 40 cents this morning on daily profit play. Just grabbed another $1.05 out of that. So I'll take that for the day. That was 105 and 40. Take the profit, move on, call it a day, and tomorrow's a new day. So all good. That way I'm not sitting here for the next 33 minutes. And if price goes down below, then okay, fine. But I do want to watch this one to the close. There's still a chance we bounce right off this 63.70 zone at the end of the day. If it would give me a decent fill, I wouldn't mind taking like a bull put spread here at the bottom. If we're going to see a bottom and bounce off of 63.70. I did kind of have an intermediate level today. We had two levels we talked about this morning in my daily profit plan right up here. So potential bottom today based on the VIX. The VIX is at 15.86. So we're looking right around a 1% move. So it all started here at the middle, and you go around 0.95%. up around 0.95%. That's roughly my first initial kind of top or bottom for the day. And then because of the adjusted moves, we had a high for the day. Now, if I go down about 0.95% or right around 1%, that puts me right around the 63.50. Now, do I think that we're going to fall another, 20 points by the end of the day? Probably not. Okay. But there is risk in the trade. Had we, or if we were to come down to 63.50 today in the next 20 or I guess 32 minutes, then I might look at that trade to see if we can bounce right there. But this is not necessarily a guaranteed bottom. Nothing obviously is guaranteed, but the probability bottom would be closer to that 63.50 zone based on the VIX, which did have a nice little spike up today. VIX is up around 5%. So VIX for the day proceeded to go up. Markets proceeded to fall. These are some levels I was watching. I was looking to see if I could pin this thing. And, I'm going to check. I mean, this trade right here that I closed out for $1.05, if I keep an eye on this one, maybe it closes out for more. If we get into 63.70, 63.69, 63.68, this potentially pays me out to $400. So I'll keep an eye on this one, but I'm out with $105. So quick win, I'll take it, and that gives me a nice little chunk of the day. Okay, so yeah, just pay attention to that one. We might have a bottom here around 63.70 if it's going to just bounce around again. The market certainly looked a little bit more interested in falling slightly. I mean, FOMC is a whole new animal tomorrow. We can take a look at the key levels for tomorrow. So this big level here at 63.70. I mean, that is a nice liquidity level. That's just price has been hitting once, twice, 3, 4 times today. And I think it's going to kind of stick there. So either we, stick around the 70 and maybe go back up to 75 or 80. It's just a big level. We have kind of this positive negative gamma area at 63.80. And if we hang out between like the bounces and intraday support at 63.70, we bounce around between a couple of those levels. So it's hard to pin price at the end of the day, but I'll certainly take the profit. Actually, I forgot that I made. Oh, I guess it doesn't matter. All in all, pretty good day. So we'll keep an eye on how this thing closes. Let's talk big picture here. I put in some trades on my newsbreaker service. I put a bunch of pending orders. Trade on Robinhood, trade on ARM Holdings, trade on Reddit, trade on DraftKings, trade on Microsoft, trade on Meta. We also have pending orders on Roblox and Roku and Groupon. Those are all running for this week. Some of those expire Friday. Some of them expire next Friday. Some of them go out to the 15th. I'm placing those trades with the idea of a high reward to risk. I'm going to let earnings do their thing. If we have blowout earnings, that's great. I'm just trying to get a high credit fill. So, for example, if I'm $5 wide in a spread, I'm trying to get filled for $3 or better, and my loss would be $2 compared to the $3 I can make. And if I get filled, I'm just going to manage risk. If I can pull, $50 as a winner or $100 as a winner, I'll just take the 25 to 50% return and get out of the trade before expiration if I get filled. But I took the past like 10 to 15 earnings reports, crunched the numbers, found where the prices have been in the past, and ran those out where it's like it's going to be difficult to get them filled, but I'm pretty confident that if we get them filled, we're going to see those levels hit and then possibly fade, which is perfect. So we'll see. And it's it's a bit of a shotgun approach where I throw out 6, 7, 8, 9 trades, and if we get 1 or 2 that fill, probability of profit of those is pretty high. So if we have 4 or 5 or 6 that don't fill, 2 or 3 that do fill, I think our chance to walk away net profitable is pretty good. Okay. All right. So that's a little bit of action there on newsbreakers. Double Up was a winner today. I had some questions on Waterfall. That trade did get updated and posted through the member portal. The trade was still valid. The trade we took yesterday, we took the SPX trade on Waterfall Income and another one on the SPY. So we had 2 trades in Waterfall Income. And one was posted yesterday during the live session. The other one was posted today, but the trades and mechanics are still the same. And the debit was like 1 cent different. So it's still very, very much the same trade. So I'm in those. Okay. All right. So that's what's going on for Robinhood. Let me take a look at some earnings here. This is the week. So we're looking at today after market. We have Visa. We have Marathon, which is in the Bitcoin space. We have Starbucks. We have Seagate, which has been an impressive tech play this year. Tomorrow morning, Altria, I'll be watching that one. I do have some naked puts on Altria. Kraft Heinz, I'm pretty sure they're going to split into something, or at least they're going to have food company and then other stuff. I don't know what the heck they're doing. Kind of like GE. GE split to aerospace and GE healthcare. So Kraft Heinz might do the same thing. Etsy, not super volatile, but always curious on kind of the state of the consumer. And then the big ones, honestly, like I think what's going to matter is FOMC, and you have earnings after hours with Meta and Microsoft. Robinhood, I think those are three big ones. Carvana, that's a big one. I did put in a trade on Carvana. I thought I did. Newsbreakers. Did I or did I not? I did. Yeah. There's a pending order on Carvana as well. So Carvana, Groupon, Roku, Roblox, Meta, Microsoft, DraftKings, Reddit, ARM Holdings, and Robinhood. So I've got some pending orders on all those. I'm going to highlight this for things to check on tomorrow. So let's go Starbucks. Let's check Visa. Let's check in the morning. Let's check Altria. Let's check Etsy. After hours, after FOMC, let's check Meta, Microsoft, Robinhood, if anything looks good there. Carvana, Qualcomm, ARM Holdings. And then Thursday at Roblox, watching that one. Norwegian Cruise Lines, I have a diagonal spread on that one. MasterCard, Apple, Amazon, MicroStrategy, and Coinbase. All good ones to keep an eye on. Speaking of that, I think I might price out a trade on Strategy and Coinbase, see what I can find. Let me go into some earnings history. Let's go MSTR. High end about 10%. Okay, MSTR. We're about 395 right now. 395.10 with about a 10% move on the high side. So I'm going to go 395. It's a little slippery there, but 94. I'm just going to go 395 times about 10.5. So about a $41 to $42. 70 is hitting. That's perfect. This is worth more profit. Resting. Yeah, it's worth a bit more. 775, 765. Yeah, it's a bit more profit now. Not by much though. I'm happy with that fill at 795. These final 25 minutes. But this maxes out around this should be maxing out around, I want to say $5 debit. In order for me to grab $400 profit, this would have to go down to about $5. Otherwise, it's going to cash settle, and it's got to be right at 6367.50 if it's going to be like spot on pin price. This also makes the butterfly spread now worth close to 225% profit for my double ups if you're still in that trade towards the end of the day. So it's pretty good pin play. Markets are selling off. Okay. Do we have the ability to get down to this low today? Do we get a 63.50 level? I don't think that we're going to get there in the next 24 minutes. But if we do, you know what? I'm going to look at this trade. Let me see here. So I don't have anything pending for SPX. I'm going to go keep this really simple. I'm going to go 64. 64. And we'll go down to 50. Right now, this should be trading for. That's about right. So that's going 50 wide. I'm going to try to get 47.50 on this trade. So we got to just dump hard if this is going to fill. This is my adjusted bottom for the day. Based on the VIX, we're above 16. That's right around a 1% move top to bottom. So if I go high to low, that's right around 63.45. 1%. Okay. So realistically, I probably need to adjust that more so to a, I think that's okay, but I'm going to go like, I'm going to cancel that and replace it. Let's go 64 down to 63.40 and try to get this one to fill for about $55. Again, this probably won't fill in the next 23 minutes, but wishful thinking if the market's going to dump. Otherwise, we just stay here and pin around 63.70, which has been a big gamble level all day. So keep an eye on that one. But I don't want to take like the late, the bull put spread, for example, is like if we drip another 3, 4, 5 points. I mean, if I did something at the money right now, if I sell the 70.65, I'm getting 225, but I need price to go above 63.67. Okay, which it's right there. It's kind of trading, but in case we dump hard for these last 20 minutes, I'm going to try to maybe catch a flashy move there for some good credit. So I don't know, maybe we'll get lucky in here in 22 minutes. We'll find out. All right. that's my adjusted level. VIX is up 16. We're right around a 1% move for the day. Let's see if we get there. If we don't, it's understandable. Not every time the market has to run that far. We're down 0.69% from high to low. Tail of the tape, we're down 1/3 on the S&P. We're down 0.24 on the Nasdaq. We're down 0.5 on the Dow, and we are down only 0.18 on the Russell. Interesting. So S&P is actually the second to worst performer. Dow's down over half of 1%. So S&P down, Q's down, and Russell. I mean, everything's red, but Russell is fractional. Nothing too awful. So we'll see what happens. All right. What else am I looking at here? MicroStrategy, $394.50 plus or minus $42. Let's do the math. 41.47 plus 395, so 436 on MSTR. I'm going to go out to the 15th on this one. And let's go to a 436 or so. So 436, I can do the 35 by 37.50. That's not bad if I'm doing to 250, trying to get like maybe $1. What's 70%? 70% of 250 is $1.75. I'll take that. I'll go $1.75 credit in this one. And that's a 250 wide. And then I do the 40.5 times 395 minus 395, 353. So 355 by 50. Try to get filled here for $1.75 on one of these trades. Okay, so this is going to be an add-on trade to Newsbreakers. I'm going to throw that in. This is going to be trade number 65. It's going to be pending. I'm not filled on this one yet, but I'll post that for members. 7/29. This is going to be the 8/15 expiration. Actually, what am I doing? 35 and 37.50. I need to go 5 wide to make it unanimous. 435. I'm going to go 440 and then 355 by 350. All right, I'm going to change that one. So 435 by 440 and then 355 by 50. There. Now I get this one filled for, let's try $3 out of 5. No, let's go 4 out of 5. 350. All right, we'll go 350 credit. Okay. So 35 by the 440 call. Sell the 355 put, 350 put. Going after a 350 credit. Okay, and then we can go Coinbase. Coinbase turning pretty hard. Earnings around 370. High-end move is around, we had some 15%ers. That could be pretty high flying. Let's go 15%. So $55 on Coinbase. $55, around 370. So 55.50 plus 370. So 425. Go 425, 430. And 55.50 minus 370, 315. Ah, fudge. This is annoying. 320. I'll go 310 by 300. I'm going to go way out there. And then this one I'm going to increase to 10 wide. Try to take in 750. So I'm only risking $250 on the trade. All right. Putting these in and then we'll switch gears. Coinbase. This is a 8/15 expiration, 425, 310. Oops, it's 425 by 435. And then a 310 for $7.50 credit. Okay, so 2 orders coming into the alerts for newsbreakers. That is coin, sell the 310. Then MSTR. That's 5 wide. Yeah. All right. Sorry, I got that backwards. Similar plays with MSTR and coin earnings this week, Thursday after close. Looking for the higher average earnings move and a reward that's greater than risk setup. All right, so that's Coinbase and MicroStrategy added to the mix. And looks like we bounced off the lows around 63.65 today. We might still have a pin price around that 70 level today. That is fine. Okay. So I will highlight those in my screenshot. MicroStrategy and Coinbase. Reddit, we got a trade running on that one as well for pending order. Roku, put a trade on that one for pending order. ExxonMobil, Chevron, not really interested in trading the earnings on those, but I'm curious what the stock does. I have shares of both. I have a long ExxonMobil since the April lows. I'm long Chevron since the April lows. I like the energy diversifier. Energy's slowly one of the more steady sectors this year, and we're probably going to see over the next 6 to 12 months, we're probably going to see commodities and energy prices continue to go up. If we're looking at this big, futuristic AI build out and infrastructure, the future is now type thing, energy companies, utility companies, very boring historically speaking, versus like high growth and momentum stocks, but they can still grow. Price can still appreciate. So it'll be interesting to see how these play out. But I think having energy plays in the portfolio does add some nice diversification as well as some good value plays and possibly some good upside appreciation too. All right. So we got some runners hanging out at 70 again. So back down to my levels, watching this one as well. Biggest level today, right at that 63.70. Couldn't ask for a better trade on double up today. Pinned it right there at 63.70. Now, we're in the final 13 minutes here. I would be out of the trade. If I was still holding this trade with the double up alerts, I'd be out of this trade by far. It's trading for $1.75, $1.80. Do the math on that. That's a big win. So $1.75 minus 40. That's not right. $1.80 minus 40. There you go. So up 350%. That's a big winner. 350% return on risk is a good winner. All in a day's work. We finally had a good level to watch. Okay, what are the stocks you want to take a look at? Top down, currencies are pretty boring today. Here's currency strength chart. Not much going on. Japanese yen ended up climbing to the high end, but still very low volatility, 35 and 35. Post Fed, the markets open up a little bit. August, September, the markets open a little bit. We've seen a lot of low and slow volatility in the currency markets, like extremely I would say at best, low volatility. I don't think we have even medium volatility. I don't think we have high volatility. We are in a very low volatility environment. That being said, it doesn't take much to change this, but man, when it changes, just be ready. And the last time I remember seeing something like this happen in my trading would have been August of 2014 when the dollar started to catch a very aggressive bid. When the dollar caught a bid, it was aggressive for months and months and months and months. Now, I don't think that the dollar is necessarily going to make this massive bull run. I really don't. I think that the dollar is facing a lot of potential like headwinds. I think the dollar has, like a secular bear market potentially in the making. I think that smart money on the dollar would be pushing this price higher to then use past support to become resistance, top this thing out, and then push it back down to the lows, right? It could range for here, but if we push lower, I don't know why the dollar can't go down. If we start cutting rates, if we start to see, more global trade, I think we had another announcement today, another pause with China. So the markets are taking that in stride, whether it's good or bad. I don't know. I guess it's better than nothing. It's better than not having to deal with China. So we just keep pausing, kind of working through the numbers. But I mean, I could see the dollar coming down to a round number at 90. And I actually have a symmetry play down to like 86 or 87. It's a little bit lower. So there's like an 87. But I mean, heck, if I was short the dollar from 101 down to 89 or down to 90, that's 1,000 points in the DXY. There's lots of pips out there for these currency pairs, right? So anyway, I think smart money brings us up to 101, maybe 102. If we get a topping pattern, look to resume this trend. Could it come up higher? Sure, we could just be in a big range as well, but we won't know that until if we have no reaction at 102 and it just keeps going higher, then I guess the structure changes. So I've just been cautious on selling the dollar. I've been very very vocal about that the last couple of months. Is once we got down to like 97. I'm like, there's too much divergence. We're oversold. We had one of the biggest runs, and it was like months of selling on the dollar. Currencies have a really, really remarkable way of finding equilibrium and balance. So even if this was a recent pullback, take your high, take your low, and look at something like a 30 to 38% pullback zone. So if we go 1, 2, 3, pull back to that like 30% zone, we probably come back and retest the low. That's a good probability trade. If we hit the 38% and we're going to be an aggressive bear market, we come back and test the low and possibly go lower. So anyway, if we get a flush move up, I'm looking to see tops around 101, 102, and then sell the dollar back down. AstraZeneca, sure. What's the official ticker there, Lee? Is it this one? Is it AZN? I have AZN and the Nasdaq. That's what I'm seeing. The stock is $74. Is that right? Let me know if this is the stock. Let's go AZN. Okay, so this is a British company, right? But I can trade the ADR with ticker AZN. LONAZN. Okay. So is this not Biofarm? LONAZN. I think it's AZN, dude. So biopharmaceutical company. I've heard of them. I don't know what they do besides just all these things I can't pronounce. Anyway, fundamentally, let's take a look at the stock. So it's up to 74.08. Lows down to 60. Fundamentally looks okay. Snowflake analysis pretty good. Level of debt, unstable dividend record, that's fine. But growing, forecast to grow, way below estimated value. That looks pretty encouraging. Price to earnings, 28.7. That's not cheap, but I've seen worse. And fair value at 127. So compared to Bristol Myers Squibb, compared to Johnson & Johnson, Pfizer, these are far more in the value space versus AstraZeneca at 28.7 times earnings. But like I said, I think the snowflake analysis looks pretty good. I don't mind. Let's see what it is in the broker platform. Maybe the option market is terrible for it. IV rank of 7. This means I'm pretty much going to make nothing on the stock as far as premium goes. But if I try to do something below $60, what does it look like? Maybe out to the end of the year or January, $60. It's not awful. It's not awful. 70 cents credit. Would I want to own the shares? Maybe. Okay. It's a little bit more. It's not really the price I want to take it at. I'd like to say I can get this thing below the April lows and try to get. I mean, it's a good trade for $50, but I don't like the trade for $50. I'd like to see this trade for $1 plus. And unfortunately the strikes are 250 wide, so I don't have that much precision to get my price that I want. So I think there's a really good case for support at 60, but I don't know. I don't love the trade at 52 cents credit. If this was offering $1, I'd take the trade. Yeah. Yeah, I mean, earnings beat, yippee skippy. I don't know. I mean, fair market value says discounted cash flow has it's $127. So there's your upside. We're trading at, $74. There's $50 upside based on the actual value of the stock. Like forward guidance, future earnings growth. It can appreciate just like everything else can. I just look at the trade and it's already up off these April lows. I'm not that interested in chasing something that's already up off the lows by 30, 40, 50%. It's up around 22% off the lows. Is there room to get back to the highs? This is 87. I'm just saying, if we have a pullback, here's what I'll say. I like this trade. If I'm going to go 62 by 60 for ratio spread, give me $1 and I'll take the trade. Okay, I'll put this trade in. I'll put $1 pending order and I'll take the trade. Okay, so I'm going to go here for $1 and see if I can get filled on that trade. So earnings beat, great. We pull back to $68. Maybe I get filled on that trade. We'll see. So I'll put a pending order in for $1. That way I can at least get the income. If I do this on 1, 2, 3, 4, 5, not that account. This account, sure. This account, this account, this account. Yeah, I'll do it on this. So if I get $100, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 accounts. It's $1,100. All right, cool. So $100, see when we get filled. Again, it's going to be a pending order. It's not filled yet, but I'll throw it in there. CVS Shane, I'll take a look at it. We got just a few minutes before the close. We have earnings on CVS this week. I think we do. CVS on Thursday before the market opens. All right, we'll take a look. So 62 by 60 for $100 pending. Let's go after it. Pending order. Pending order. Okay, pending order. Okay, pending order. I'll post that one for my Project Options Edge. AZN. That is, oops, 116 expiration. Buy the 62.50 put. Sell the 60 put. $1 credit. Pending fill. Okay, no one's in. Let's take a look at CVS. CVS with earnings on Thursday, trading at 60 bucks. I like it at the right side of the trend line. I don't know if the premium's good enough on it, but if I could get this thing in the 40s, let's take a look at CVS here. Premium's probably not great, but again, Snowflake is okay. Big risk on debt. Profit margins are lower, but way below estimated value. Earnings forecast to grow. Does have reliable dividends. I don't really want to own it, but if I had to, where would I own it? Probably below April lows at $44 to $45. So if I went CVS here, check the trade. I know they have earnings. I'm not really interested in playing earnings because it's a low volatility play. It's only going to move a couple of dollars. But if I went out to the end of the year, 40 bucks is a pretty big one, but that low is $44. So if I went to the 50 by 47.50, very similar to AZN. Like I'm getting 65 cents income. I don't really want to take the trade at 65 cents, but I would take it at $1. Get $1. I'm risking on this. I wouldn't mind owning the shares. It's cheap enough. We stay below the April or stay above the April lows and give me the income. So I'll do the same trade. We'll see if I can rapid fire this one off for $1. $1. See if I can get all these accounts filled again. Okay, let's see if they'll let me work these orders and just put them in as pending. Okay, so I get these orders as pending. That's fine. Okay, a couple more. All right. So AZN pending order, CVS pending order. That is a buy 50 put, sell the 47.50 put, $1 credit. Pending fill. All right, those two trades will go out to Project Options Edge. Shane, if you're looking at CVS, are you looking at it particularly for earnings? Because I can give you an idea of where we're going. CVS on earnings, average earnings move is around 11%. So the stock's trading around $60. Okay. So we're looking at maybe a $6.60 move plus or minus. That's based on the previous earnings. Usually this is a lower beta stock, if I'm not mistaken. Yeah, 0.60. Let me see if the premiums are good enough. Maybe this is one I like for maybe selling. Let me take a look here during earnings. So if I went out to the first, it is a Thursday morning or Friday morning? Thursday morning earnings print. Okay. So do we have a big blowout move on CVS? Let's see. What do I get if I sell at the money? So we're trading at 60 bucks. So I sell the 60, sell the 60. I'm getting $4.30 with a plus minus of 379. That's okay. I do want to make this trade as high reward to risk as possible. So if I did the 59 by 61, go maybe $7. That puts me up to 66 and down to 54. So I get 466 in this trade. It's just over a 1-to-1. If price stays roughly between I'm trying to think break even wise, around $64 on the upside and around $55 or $56 on the downside. So between 56 and 64, that's my break even. Anything inside of that where I mean, ideally it stays right around $60. So I'm going to put a pin in that one and maybe come back and see this one tomorrow for earnings. So my newsbreakers course, I might take this trade. 59 by 66. And 61 by 54. Okay, that's not a bad trade. All right, I'll take a look at that one tomorrow once we're back into the market. So I'm getting credit. It's going to be a bit of a profit trap play and see if price can just kind of stay within a couple of key levels. If we have like a, it's just it's a sell based earnings play. So hopefully it's not just a big surprise move. The average move is about 10.8, which is what I calculated. We've seen the high side about 13.7. On the low side, and actually more commonly, is around a 5 to 6% move. So if we did a, let's say a 5% move at $60, I mean, that's only a $3 move. That's enough to still get credit on the trade. Okay. Lee says, do you think the recently negotiated trade deal between U.S. and Japan could prompt the Bank of Japan to raise their interest rates? That's a great question. I mean, I think if we want to find out, let's go to the Japanese 10-year. Because I don't know, man. I mean, I think that the Japanese bond yields that are going higher are also a reason that the U.S. Bond yields are stickier and also staying elevated. I mean, the Bank of Japan most likely is going to pause at this 0.5%. We haven't seen like a monster deleveraging yet. I don't know what their goal and ambition would be to raise rates. They have been one of the more radical central banks we've ever had. Like crazy radical monetary policy. Some of the biggest fundamental moves in the forex market that I've ever traded was with the Japanese yen. So I wouldn't put anything past them. But at this point in time, I almost think that they went from -1 for almost a decade to 0 to 0.1 to 0.25 to now 0.5. So that's where they're at, right? If you go to cbrates.com, check and see where everything's at. Japan is at 0.5%. That raise was back in January. There has been no talks of them raising rates. A deal with the U.S., I don't know if they're going to raise rates. If anything, the deal that we did with Japan is actually spurring more beef, if you will, from U.S. automakers because of some of the advantages that we're giving Japan in the terms that we laid out in the trade deal. So I don't know. I don't know if they need to do anything monetary policy wise. The U.S. is also going to be cutting rates probably this year. At least that's what it's showing us is by September, December, we're getting at least 2 cuts. And if that's another 50 basis points, that makes the U.S. a little bit less attractive as far as carry and swap goes compared to the JPY. I will say this. If the Bank of Japan raises up to like maybe 1% and the U.S. is coming down to like 3.5 or lower, I think that makes a lot of the carry trade potentially unravel. So this idea of the dollar yen sitting at 148.50 right now, if we start to see the carry trade unraveling, I'm telling you, this is what this yellow box is for. Okay, so we have this channel right here. All this is noise. But if we start to see the carry trade unraveling, this is a topping pattern in the making that if we break this neckline, we're going back to 120. Okay, so I think, I mean, this is one trade that I don't want to miss. This is one thing in the currency space that if I can get this thing even remotely right, there is a huge, huge trade opportunity. But you have to be extremely patient because this thing could go all the way back up to the highs again. And then we're sitting here wondering, like, when's the top? Are they going to do something to, yield curve control? Maybe, but if it is it a multi-year range that we trade from 162 back down to 140, you don't want to put anything past the Japanese yen. You don't want to put anything past the Bank of Japan. You don't want to guess. It's like just trade what you see. It's not a currency pair you want to fight. It's not a currency pair to be brave. Just trade what you see. So if we get a good looking trade to the downside, I do like it. If we break this structure, I will look to see if I can sell it back down to 140. If we break 140, all I'm going to do is try to scalp, like swing scalp this thing all the way down to 120. Because if it gets there, we're going to go fast. We will go 2,000 pips probably within a couple of months. And to me, that's worth just doing nothing on it right now. I'll wait and I'll see if this trade is really the big setup. If it's not and we're going up here, then nope, that'll come later. All right, what else? I own the shares for a while at 80 bucks, trying to sell cover calls, hope it recovers someday. I got you, Shane. So you're in CVS. I got you, man. Unfortunately, well, you can have a variety of ways. Like selling cover calls is one way to do it, but unfortunately, when you're $20 above the current price of the asset, you're not going to get a ton of premium for that without going out a long ways in time, right? So there could be some more creative ways. I just don't think the premium is going to be great. But if you, I don't know, if you have the cash, you could definitely do some naked puts and just try to keep them out of the money. You could do some ratio spreads like that trade. It's like if it gets you $1 income, it lowers your cost basis by $1. So if I don't know, it's not easy. Like if you're upside down in a trade and you didn't have like the put protection, or you didn't have the ability to lower the cost basis with the stock dropping, it can be a little bit challenging to kind of repair it. But be persistent. Um, there's ways to obviously trade the options at current prices. You can sell some puts out of the money. You can do some ratio spreads. You can do some bull put spreads. And if those little trades generate income for you, then it still lowers your cost basis. You can play around with that versus trying to just sell call, sell call, sell call. Because going out of the money 20 bucks right now is not going to be good, right? If I went out, let's say, 50 days and I sell an $80 covered call, I get 5 cents. I mean, after paying fees on that, what good is it? It's worthless. So it's one of those stocks where it just doesn't offer premium unless it's right around the money. So it's a hard one to repair. But if I were to do a 55 by 52.50 and grab 50 cents, it's like that's not a great trade as far as reward to risk. But if I can grab 50 cents and I'm right, then I can chip away at my cost. So if you're willing to hold the shares, it's one of those you have to consider. What can I do with a variety of option strategies to then make money on CVS to lower my cost basis? Not easy. Muhammad says you have a course about currencies and forex. Yep. Check my Keep It Seriously Simple video series. If you go to my YouTube channel, okay. So my YouTube channel, and you check out KISS. You can watch anything in my Keep It Seriously Simple playlist. There's how many videos? Let's find out. We have 46 videos talking major themes, price patterns, symmetry, technical support resistance, blah, blah, blah. A lot of it's Forex related. And I sprinkled in some options, some crypto, some other stuff. So yeah, check them out. If you start from the beginning here and they keep it seriously simple, I think that'll be that. A lot of that was kind of built in the Forex market. Forex market to me is one of the purest technical markets in the world. So I would put Forex like at the tippy top. I would put futures second to that, and then I'd even put crypto third, because crypto is kind of followed in the footsteps of liquid markets. And then stocks, because you have all the gaps, it still trades liquid. Obviously, it's liquid, but it's like the efficiencies. Stocks are way more inefficient. You have gaps, gaps, gaps. The market runs forever before it pulls back. There's no fibs. There's no pivots. Screw it. Like it just doesn't work in stocks the same way it does currencies, because you have kind of levels of highs and lows that the markets tend to kind of stay in between for big ranges. Exchange rates are global, right? So countries don't want to have like the lower the disadvantage of a super weak currency pair or super strong currency pair. So there's a lot of like 30, 40-year levels that will probably be maintained to some capacity. We've had all-time highs and lows broken, like the Swiss especially has broken highs and lows. The Japanese yen's broken highs and lows. But it's still a very efficient market where you can have pivots, pockets, overbought, oversold conditions. Have the stochastic like swings and oscillations in the market. A lot of traders just like love the technicals in forex. I fell in love with that too when I started trading forex back in the day. So dive into these videos and have some fun. Give me some feedback. Options is more easy. It's not more easy. It's just better risk management. It's better risk management. You take away all the manipulation at tops and bottoms, and you trade price and time. That's all an option is. So you don't have the shenanigans of the market like testing, stopping people out, right? You just trade price and time. If price is above or below, I make money. It's that simple. So I don't have to worry about all the other tests and the wicks and the fake outs. And plus, you don't get that very often. And stocks generally want to go up. So it's a bit easier just to trade something that's inherently bullish, that has a bias to go up over time. And why would you fight that? So it's a little bit easier to have a bias, have a house edge, trade the market that's been bullish for all these years, and trade price and time that you don't have to worry about all the manipulation. When markets are falling, would you still put bull put spreads and where? Um, I mean, if the market's falling, yes. I do that in waterfall income. So waterfall income, we set up a lot of trades. We've traded, this year really, um, I'd say flexibly to say a word, because I was planning for a pullback. We got one. We stomached that 20% pullback very nicely. Had some nice income trades, grabbed some bonus profits, and then on the bottom in April, we've been trading the melt up ever since. Um, but when the market is falling, it's like to what degree? Are we talking, a 1% pullback, a 3% pullback? Are we talking 10, 15, 20%? We talking a bear market? Big difference. I mean, if I'm going to sell premium or sell puts on a falling market, I'm going to try to sell probably a 15 delta, like a 20 delta, 15 delta, something that's like out of the money. And when the volatility goes up, you have that expansion and volatility. That means you're getting bigger than expected moves. So if I sell the edges of those expected moves, the probability of that being greater than the actual move remains the same. So yeah, I still sell premium and still sell puts on falling markets. It's just, do I think it's a bear market? And then if I do, then I kind of want to stay the heck out of the way. But there's ways to also create profit traps and take advantage of never getting assigned a stock, but still having profit traps and making some good income. But yeah, I mean, there's ways to do it. I don't think there's any environment that I would say I don't want to trade. I mean, if the market's crazy bullish like it is right now and nobody gives a crap about anything other than going up, I still want to trade it. I want to pull back like I keep talking about for these last 3-4 weeks. I want to pull back, but I still trade it. When the market was scary and falling and we're going to have like systemic global trade war, I still wanted to trade it. And I still did trade it. So there's nowhere to hide. I mean, you can hide out in cash, you can go risk free, you can pull your investments and go to the bank and sit on cash for 12 months and hope it does fine. I'm still going to trade it. I'm better that way, making money in the near term, short, medium, and long term, and actively managing. Just know the levels, know the break even, know the risk associated with every trade. There's no bias in currencies. Yeah, that's true. There's no bias. I mean, you look at a currency pair for 10 years and you can't tell me there's a bias. Yes, there's a direction up and down at some point in time, but you could go 10 years and that currency has returned nothing. It's just flat. So what do traders do in the currency market? You trade the ups and you trade the downs and you grind through those directional pushes, right? But there's no bias. I mean, the only bias I've seen in the market is when you have a broken currency like the Turkish lira. You look at the dollar Turkish lira. What has this thing been doing for the last several years? Here's a bias. You have a country that has triple digit inflation and their currency is essentially broken. And for the last 4 years, this thing has done nothing but depreciate against the dollar. So that's a broken currency. But if you look at something like euro dollar over the course of all these years, how long do we go back and see, like, has the dollar actually gone anywhere compared to the euro? Right? We had lows here back in 01 that were at 86. We had highs in 08 that were 160. We're trading somewhere in the middle. Over the last 20 plus years, this isn't higher or lower. There's not a bias here. This is a trader's market, right? Very different than a stock that goes to the moon. Trader's market. So, okay. I'll let you go. Let's come back and do this again tomorrow. Real quick before I go, just a little plug here. If you'd like to join me, I'm trading this every morning, daily profit plan. It's free. You can join my Zoom. You can join my YouTube session. We jump in the markets. Tomorrow's going to be Watchlist Wednesday. It's going to be a busy day. We have a morning session, and then I'm doing a trading battle in the afternoon during FOMC, and then I'll be live to wrap up the day, probably around like 3:30 after we wrap up the trading battle. But big day tomorrow with FOMC. Aftermarket, we have earnings on Mag 7. Thursday, another Mag 7 type day. There's like 37% of S&P market cap up for grabs this week with 790 companies reporting earnings. And then it was, I thought, a big Friday because we're ending the month. We kick off a non-farm payroll announcement on the 1st, and we also have the tariff deadline. So I think that the punt has already been delivered. We've put in another pause, I believe, with China. We do have some deals in good faith with Japan and Eurozone, which are two big trading partners. And I think at least starting that narrative and just telling us as hey, we want to know what's going on with the trade stuff. We're being told that deals are happening. It's 15% across the board on tariffs, I think, for Eurozone, 10 to 50% Japan. Maybe it changes, but we don't know. Like, we truly don't know the terms. It's just that we're being told, like, they want to do a deal very badly. Okay. So the market is taking it like it's a good thing. So I think that the impact of tariffs has been reduced quite a bit. So I don't think that the tariff deadline is as big. But I do think what Powell says tomorrow in the afternoon and what September brings for the rate decision and what the seasonality pocket brings for August, September for a likely pullback and the technical melt up we've seen, I think the market's going to have to roll over a little bit and pull back. And we talked about that all week. 21 period moving average, 50 period moving average, previous all-time highs in the S&P and the Nasdaq. Let's watch those levels. Okay, so if you'd like to join me for the daily profit plan, I will share the link in my Telegram. We go live every morning, so Telegram is nice and active. So here's Tuesdays today. Posted some levels here with key support. We did hold above it. We actually held right at that support level. We came down to 64, came up to 70. Okay, but my intraday levels held pretty nicely. VIX, quite a bit of a rally on VIX today, up over 6%. All right, so Telegram is here. I'll post Telegram and Discord if you'd like to join, and it's free for all. So here. All right. So there's Telegram, and then I'll post the 30-minute link for Discord. Okay, so there you go. So the link is good for 30 minutes in Discord. Just read the rules. I don't send friend requests. I don't send direct messages. I will reply to them if you send them to me. I'm in the public channels, free group chat, Forex chat, stock chat, options chat, futures chat. Talk to me there. Okay. I'm not trying to, make friends and have a bunch of private conversations on Discord. I just want to keep a channel that I can keep all of my content in one place. So read that. And you can also find me live every single day. Cool. I think JP will sound a dovish tone to appease Trump. Why? Trump actually can't do much as far as firing Powell. He can't. I don't think he has enough cause. I think this probe of misallocated funds for a Fed renovation I think it's just a huge misdirection. I don't think Trump really has the authority. It would look. I think that the whole idea of Fed independence looks really bad if Trump continues to apply the pressure of fire Powell, right? I mean, Besson has said it's I don't know. It's not. I don't think it's worth the market noise because we tested it a couple weeks ago. If you saw this a couple weeks ago, this is what the market responded to right here. This is when the market was believing for a second that Trump's going to fire Powell. Boom, down 0.74% in 20 minutes. So if he proceeds to talk that noise, the market's not going to like it because all of a sudden we don't have an independent Fed. Now, I also wonder if the Fed is actually, better going to serve the U.S. rather than being a control monetary policy, make sure there's stable inflation and full employment and liquidity and what I'm trying to think of the other mandates: employment, price stability, inflation, like the three big ones right now. I think the big one moving forward is I think the economy, the Trump administration wants growth so badly that they want to run the economy hot. They realize like we have sticky inflation. We're not at sub 2% inflation. We're not getting deflationary pressures. We want this economy to run hot so we can grow through it. So if they're trying to get the Fed in a position to acknowledge that 2.5% CPI or 2.4% CPI or whatever headline CPI is, it's not going to stay lower. So if it goes up and slowly goes up to 3% or 3.5%, can the U.S. economy handle that? Consumers might say no. But the U.S. economy at growth factors probably can if we're growing. I think it's a very slippery slope, and it's also a needle to thread. But I think that's this big up in the air because right now, like a big sticking point is real estate, consumer housing, residential housing, commercial housing. Like commercial real estate and residential real estate, very different animals. But long short of it is we have high interest rates and we have really high prices. So we are mathematically at the most unaffordable market that the U.S. has ever had. It's not good. But you can't just demand that the Fed cuts rates because the bond market may not respond the same way. Okay, we've mentioned this before, but this is my big concern in 2025 is that Trump wants to put so much pressure on cutting rates. But if you look at where this thing has gone, okay, this is the 10-year. Okay, so we peaked around 5% back in 2023. We've come down to as low as, this was back in This is right before the Fed cut, by the way. So this is what's kind of nasty about this move. Right when the Fed cut right here, the market did the exact opposite. So usually that's not the correlation. So this year coming into rate cuts, it's all going to be the tell of where this bond market goes. If we see the Fed cut and the market yields go down, that's good, because that means everything is aligned with the typical 40, 50-year correlations. But if we see the Fed cut and the yields go up, that is not good. That means that these trades are not getting, like the long end of the curve, the borrowing at 10, 15, 20, 30% or 30 years out is not going to improve. So unfortunately, that means that the other thing that breaks is going to be prices as opposed to interest rates. If interest rates stay sticky at 6.5% for a home, what might have to happen is you have to discount the prices of that home. If you want to make it affordable, prices have to be 20, 30% cheaper. Builders have to build cheap. They have to build at cost plus versus market plus. People have to sell for a little bit less than what they think their house is worth. And nobody wants that. If you're playing with people's portfolio, playing with people's real estate portfolio, that's a big, there's trillions of dollars in real estate, So anyway, we will see. It's going to be interesting to see how it all plays out through September, December. I still think the market is still mostly resilient and pretty bullish, but it's not immune to something bad happening. It's not immune to a black swan. It's not immune to some big outlier risk that we don't see happening right now or we haven't talked about yet. But I do think that the stability of the bond market and the U.S. dollar will be key to maintaining these current levels that we're at with all-time highs. If something slips or something breaks, and I really think the disappointing thing would be this market. If the Fed cuts and the bond market reacts positively, meaning the bond yields rally. If bond yields go up, that means bond prices go down. I don't think that's good for anybody, because it's going to continue to make, I want to buy a car, it's more expensive. I want to buy a house, rates are higher. The amount of interest you pay as rates go higher, it's awful. So I think that this is going to be the big tell from September to December with how much, deflationary pressure versus inflationary pressure that we have. And I know it's boring to sit here and watch a yield chart, but I think this has big implications for what we see over the next, 12 to 24 months. Because this is where like a big macro event I think is lying. I think this is like the I don't know, the monster underneath the surface or whatever. Right? We'll see. Let's see here. Did you do the rolling call discussion earlier? I didn't do it for this session. No, I just jumped in. We only had about 35 minutes. So we'll save some rolling calls tomorrow for my my daily profit plan in the morning. I do have a couple to take care of. I took care of SPY, but the ones I have to take care of still for the rest of the week: Intel, Tesla, IWM, UNG, JD. I'll do those tomorrow in session. So come join me in the morning. We'll knock those out after we get our morning trades in. Okay, I'll let you go. Thanks for being with me today, and let's come back and grind for a big, busy day tomorrow. Lots of sessions, lots of fun, and we'll see what's exciting. All right, I'll see you soon. Thanks, bye.